What's up, everybody? Welcome to Own the Chaos. My name is Brad. That over there is Don Fron from the Don Fron Show. Don, I got a really good topic for today regarding options. If you guys are new to the channel, we put out videos once a week as far as and talk about options, everything options with Don of the Don Fron Show. And Don's been a huge help with us personally in our journey with options, but also for those of you guys who've been following the channel for some time. On just kind of any questions that you guys might have with options. And I have some really good, solid questions for you, Don, this today, whatever this comes out Friday. So, if you guys, if you guys have any questions, of course, put them down in the comments below, but let me get on to Don. Don, what's up, man? How you feeling, brother?
It's happening. I hope the market pulls back. Hopefully, as we're seeing this, the market is just blood red.
Yeah, so I mean, it looks as if now this is going to come out Friday, so we're recording this the Sunday before the market opens on Monday, and we're still waiting to waiting to see what happens with Tesla and this whole Elon Musk drama. So that'll be interesting for sure.
800. If we could just get to that.
Yeah, I mean I would love it to get to 800. That'd be fine with me. So anyways, getting on the option. So I actually have two call options or two positions in DR Horton. Now they have earnings that come out on Tuesday. I'm very optimistic about the home builders in general. I feel pretty bullish about them going into 2022. And so I decided to make a little bit of an experiment. I took some calls that are directly in the money, right at the money at 92.5 that expire way out in May. So I got plenty of time for those. But then I also decided, you know what? Maybe I'll take some 125 strikes for February, just in case DR Horton decides to go, crazy. If it goes bananas, maybe it, it makes it for a decent trade. But I decided to not go crazy on this one and make it a smaller trade, the 125s, I mean, and then also go into a little bit more deeper in the money or make a larger position size rather with the 92.5. And I kind of wanted to you to talk to the Chaos crew a little bit about risk management and why it would make sense to either take something in the money or out of the money and why it would make sense to do either one of those.
Okay. So there's quite a bit to unpack, a lot and a little all at the same time. So when you're jumping in out of the money, you're automatically saying it needs to make this move, right? Let's say you worst comes to worst, that's not the most liquid ticker. So you might be, first of all, volume is volume a thing because you might just be buying the Greeks. Like it's gonna be you, the market maker that provided that liquidity, and you're gonna be it at the end. I've been in contracts that there was just no buyer. It didn't really matter, so I'm just rocking this thing to the end. Not often, but a lot of people wouldn't suspect it. That was Google that I was in. So going out of the money, it needs to already make that move. So these are ones that get typically posted on Instagram because they get the crazy percentage gains. And a lot of people where I just really automatically caution this. Fat Man Zoom listens to our conversations and he says it sounds a whole lot like the parent telling the kid, do not touch the stove. It's hot. It's because I see this mistake all the time. They think risk management is just buying something cheap. And, it's like going to the blackjack table and placing the minimum bet. That's not exactly risk management. It's a lot harder setup to have. So it's really where are you at in your trading journey? Because the question like we talked about last week is what move do you see coming? Because that's where you would probably place it.
Yeah. So looking at this, I decided to take a much larger position at 92.5 because I feel pretty confident that 92.5, we're going to see this much higher than 92.5 going into next year. Obviously, these calls don't expire till May, so I have a lot of time to kind of make that determination as to what direction we're going in. But then I decided to take a little outside of the box, $800 worth of 125 strike here that don't expire until February. And I kind of equated this a little bit to, my penny stock career and kind of looking at something and being like, well, I feel much more confident in something that I would put more money into, but for something that's at a 125 strike that costs 17 cents per contract, am I going to miss that money if it goes poof gone? No, I'm not. And I think that that's kind of one of the things that we try to encourage with our folks, whether you're trading straight up shares or penny stocks or even options, making sure that you're not going to take any more risk than you're willing to lose. And so in this scenario, is it going to break my account when I'm taking an $800 bet on something? No, it's not. But and you talked about this off air about, if you take more than one position like that, they all add up, and if they all go to zero, well, then you're kind of SOL.
Well, again, there's something we'll say, hey, this is little money for us.
Yeah.
And
Right.
we actually mean it. We've been doing this for a while, where I see a lot of other people say this is little money, but their comments after are telling me it's not little money.
Yeah.
The account size. I bet, again, it's probably just two separate values. So that's where I always try to struggle or hit on it, coming from, because I take out of the money stuff, but it's not something I preach, because there's just the associated risk with it. Like, does that person listening, do they know what risk management really is?
So when you are looking at something, what does it make sense for you to actually take something out of the money? Is it whenever you make a trade out of the money, are you just thinking to yourself, okay, this is just a gamble and I realize what I'm getting into? Or do you actually think that there's something to getting into something out of the money versus in the money?
No. So the snappiest part, like, if we drew up the bell curve, you're right at the money and it's going to go up or it's going to go down. That's where things get the snappiest. The out of the money, you'll see those as it goes. It's the perfect play. You were right. It's out of the money, goes in the money. You watch those spool up fast. So when I do see a bullish move coming, I'll try to take advantage of that. But it's just the at the money's just always been the sweet spot for me, just so I can, because we both take that move. Yours is out of the money, mine's at the money, and it makes the move up, right? We're both right. Yours, percentage wise, is going to look a whole lot. You're going to make 3,000%, where I'll make a couple 100%. I spent $4,000, like $4,000 versus 800. So I'll spend a little bit more, and I have a little more. Yeah. By the time we get to that conversation, I'll be talking about how deep mine are in the money, where you'll be talking about you're at the money. So, like I said, if you see that move coming, it's, I don't want to say earnings at the time. Maybe you see a catalyst coming. Maybe there's just something you're hyped about. I can't think of the specific example, but there's just some hype coming, and this is
right.
This is the time. You'll spend a lot less going out of the money, but there's that scale. There is not a single one time in options you can tell me you will spend less without increasing your risk. It is a give and take in every single strategy.
When you take something that's in the money, and you talked about spooling up, so when you take something that's in the money, you actually start making more money the higher that stock goes and the deeper in the money that you get. Correct. So like if I, with looking at these 92.5 calls that I have that don't expire till May, if that continues to go up and up, and let's just say it gets over $100 and starts to make its way towards like that 125 that I have, the ones that are way out, I'm still going to make so much more money with the ones that I have at 92.5, because it continues to roll up while it's kind of playing catch up with those strikes that are at 125. Correct.
Right. Let's say it pushes to 125 in February. How much are your 125 calls worth?
I mean, they'll probably be worth a lot. I mean, I'm already up quite a bit, but dollar wise, they're probably not going to be worth more than the ones that I have at 92.5 with the amount of money that I have in them. So the position size obviously matters.
Zero.
I'm sorry. What?
They'll be worth zero. Yeah.
If
we're sitting in February.
So they have to be more than 125 in order for me to actually even just break even by February. Correct.
Yeah. So if it's a slow grind to 125 on February, your out of the money ones will be worthless, versus your 92.5 will be almost $35.
Yeah.
So, that the good thing you did was you gave it time to make that move. But I'm looking at the options chain right now. Your February's, the expected move is $15. And, that's just the, if we're going to talk about probabilities and playing numbers, 65% chance we stay inside there. So the $30 move there's a 95% chance we stay inside 35s. So that's 15 up or down in either one deviation, whether it's Bollinger Bands, that's what they're basing it off of. So you placing the 125 bet is saying it's going to exceed what everyone else thinks it's going to do.
Gotcha.
So That's where I started. If I'm placing out of the money, I'm usually not outside one standard deviation.
Okay.
Because
Makes sense.
that's you placing a bet on there's gonna be a gamma squeeze.
Yeah.
Like there's gonna
Oh,
be something up there. Mhm.
yeah. Yeah, for sure. One last thing before we let you go. I just wanted you to take a look at the DR Horton chart because I feel really optimistic about the home builders in general. So let's go ahead and let our viewers take a look at the chart in general and just kind of get your thoughts on DR Horton and what
Okay.
you think just by taking a look at the chart.
Real quick to tell everyone, so you were in the Februarys, right? You're in the
February.
February and the
So
Mays.
yeah, the 125 kind of YOLO trade
Mhm.
strike is the February, and then the ones that are in the money are way out to May. Correct.
Yes. And this number right over here, that's what I'm talking about. Market makers, everybody, we're expecting a $15 move for the Februarys. By May 20th to 22, we're expecting it to move $20. So that's your one standard deviation in there.
Gotcha.
And that's just where I get it from. As far as this goes, it just got above that zone. What I was kind of curious about was, and we got to be careful with charts. This is something I preach a lot because you can draw the Picasso of charts and your lines don't really matter, right? Like
Yeah.
you're the only person that sees it. So was that a channel down? But one thing I kind of noticed was we've played this game before in this ticker. Not quite, but that did catch my eye to where we kind of go in this channel for a while and then push up. So what I personally look at is characteristics of a ticker, and I would actually be kind of curious, are we going to set up for that same move in another leg up? So personally, I wouldn't want to, I'd be waiting for it to get above this zone that I have here, and it just did. And well, your options are green now. So breaking above that, staying above that, I'd say we're good. Getting above the 102 mark, I think you might see some liquidity pop up in those options. That's what I would like to really see, but not that I would wait for the 102 mark. That'd be leaving a lot of money on the table to wait for a breakout that far.
Yeah, yeah, for sure. And that's kind of what I'm banking on as well. Guys, let us know what you think down in the comments below and how you feel about the home builders in general. Me personally, from a fundamental standpoint, demand's still through the roof and supply is starting to make its way or starting to work itself out and in the way of building new homes. The only way that you're going to solve an inventory problem is if you put new homes out there, especially if nobody's really willing to sell at this time. So you look at that, and that's kind of why I think that we could see a push up in the home builders in general. And so for me, I'm going with the largest home builder that's out there. That's DR Horton. You could go with a couple other ones. Let us know what you guys think down below. But guys, also make sure you go check out Don. Don, where can they go find you at?
Well, you can find me on my YouTube channel, obviously Don Fraud Show. But I told you to say this even off air. If you guys are learning options and you're just now following along, I came to Brad in Fat Man Zoom with a very specific strategy. So if you are following them and on this, the reason we're going over in-out spreads and we're going over in this order is not because we sat around a campfire and just decided let's do options one day. So it is by design. So yes, I have my own YouTube channel. You can always come there and ask me questions. But I'd say if this is your style, just make sure you're subscribed to this channel because these videos come out on Friday and it'll be the whole journey. You get to watch me go through it.
Perfect. Thanks, man. Appreciate your time, guys. Thanks again. Hit that like button and subscribe, and we will see you in the next one.